Welcome back to Calgary real estate market. Calgary edges back to seller's market territory. I'm Uros Markovic, Calgary and area realtor, and in this market update we will cover everything that you should know about what happened in October. This month we received mixed signals from Calgary real estate board statistics. On one hand, we have an average price drop again for the fourth month in a row. In an interesting turn of events, we had more sales in October than we had in September. That is something that we don't typically see most often. Sales decline each month in the later half of the year. Last month we reported that for the first time in 3 years we are in a balanced market, but this month, despite lower prices, we are back even slightly into seller's market territory. So what is it all about? Well, let's take a closer look. Let's talk about a sales summary to start with. October sales figure shows an average price in Calgary of $592,500, down about $4,000 for a previous month. Sales, on the other hand, increased, coming in at 2,174 units moved, up nearly 10% from September. October was one of those months where the data points don't match the trend, and so you have to look at what might have changed. In October, I believe that we are seeing the effect of the recent reduction of the key lending rate by Bank of Canada, and addition to buyers seeing price coming down a little bit and deciding to jump into the market. It is difficult to predict if this is uptick to continue into the last 2 months of the year, though, as November and September are typically very slow months in real estate sales. However, as interest come down furthermore, we should expect that more buyers will decide to move into housing market, which will perhaps have an effect on moderating the traditional winter slowdown as we would expect to see in Calgary and area. Now let's take a look of the inventory. One of the things that has stood out in the data going back a couple of months is that increased inventory we are seeing over this time last year. In September of 2023, we have almost 2,000 fewer listings than we have on the market right now. This was a big factor in a hot start that Calgary saw at the beginning of 2024 and perhaps encouraged some sellers to bring their properties to the market at elevator pricing in a hope to secure a great exit from the sales. And indeed, we are seeing a heightened level of supply at the upper end of the price spectrum, with buyers' demand still strong enough to pull months of supply metric below 2.5 for all segments except $1 million plus range. We do see 2.57 months of supply for price range between 300 and 400, but it is largely due to this price range contain most of the newer apartment condos product hitting the resale market. So is it a seller's market once again? Looking at the overall market, the pop in the sale that we saw due to interest rate reduction has brought the balanced market back into seller's market territory. Even though it is a small amount, it is still an important break to the trend we have seen over the last 5 months, where we saw increase of months of supply and inventory climbed. Well, 1 month's worth of data doesn't make a trend though, so we will need to see how this hold up for at least another 2 months of a year as we look ahead of what 2025 might look like. Well, let's take a look ahead. We are already seeing some signs that 2025 will have a cooler start than what we saw in 2024, largely driven by the inventory disparity we appear to pose to carry into the next year. While we expect some listings to come off the market as they expire at the year end, many realtors put December 31st as the expiry date of the listing contract. At present, we have 5,000 active listings compared to 2,000 we had when we turned the corner into 2024 back in January. It would really take a huge buyer push to change this over to the last 2 months of the year, and so, considering that in October we only saw a few modest months of supply increase in sales, about 170, corresponding to 1.25 change in the key interest rate, it seems quite unlikely that available inventory will be drawn down by new buyers coming to the market due to lower rates. Alright, so let's take a look at what is in the news. Well, we have new old president returning to the Oval Office down south, making the major headlines. It is really unclear how this would affect the Calgary real estate market, but it is something that we will have to watch as it pertains to changing the federal policy or our energy industry. Locally, we are seeing that federal government is walking back their immigration targets, but as much as 21% over the next 2 years in response to public pressure regarding housing affordability and access to the government services put under strain by such high level of immigration over the last few years. This will certainly curb housing demand, but is more likely to affect the Toronto and Vancouver markets, which lead the country in density and international population growth. Alberta's largest driver of growth is interprovincial migration, and given that we are still very affordable in comparison to those large markets, a change in overall migration is not expected to dramatically change the buyer demand level we see in Calgary. Another news is that there are 3 big mortgage changes coming December 15th. So let's say, number 1, for the resale buyers, the first-time home buyers will be able to purchase any resale property with less than 20% down payment with 30-year amortization. This is currently not possible. Change number 2 is that all buyers will be able to purchase new build home with less than 20% down payment on a 30-year amortization. Currently, this is opportunity only available to the first-time home buyers. Both those changes will result in approximately $300 lower monthly payment or increased affordability. And change number 3 is insurance mortgage price cap increases to $1.5 million. This allows buyers within that price range to qualify for high loan-to-value mortgage insurance. The down payment structure will remain unchanged, so it will require 5% for the portion of the purchase price up to $500,000 and 10% for the portion between $500,000 and $1.5 million. Buyers will be able to purchase $1.5 million home with just $125,000 down payment, a significant reduction for what is currently $300,000 requirement for uninsured borrowers. Have you had your property evaluated recently? What about your borrowing ability with the newer lower interest rates? As always, if there is anything I can do to help you with your real estate, don't hesitate to reach out. Thank you very much for all of the support, and I'll see you next month in my last update for 2024. Have a great November.